General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right. So today is Thursday the 2nd. Gotta love Notion. January 2nd, 2025. Let's go to H1. That's target hit. I was able to get a little piece, I think in here. Maybe it was in here. I think it was in here. But I didn't get the better trade, which came later. Target hit. Let's go to the weekly. Okay, so this is supposed to be like a daily thing here. Let's go back to the weekly. Got a liquidity sweep here. Bottom right, weekly liquidity sweep. We got a nice reaction from it. It could be the start of a smart money reversal. Tomorrow's Friday. It could be TGIF. Weekly liquidity sweep. Could be the smart money reversal, or it could just be setting up for the TGIF. Let's go to the daily. So that was the was a target. That's the old weekly objective. I'll take this off. I'm gonna keep open price here. Keep this here. That's actually like the New Year opening gap. I think that's gonna be important for a while. We don't cut. Previous month's range. It's not even previous month's range no more. This is December. No, this ain't December. This is November, because December is here. So this November's high. And this is November's low. We're almost back in, we're basically in November's range. So let's do this. It's November's range right here. So it's November's high, November's low. We got the weekly liquidity sweep, which you swept previous week's low. It's interesting. Still in December's range. This is the first day of the year. In 2025. Okay, sweep of previous week's low. Haven't closed below. We could get TGIF still, I'm thinking, for Friday. But really, the big moves will come in next week for NFP. Let's go to H4, see what if we got CSD or anything like that. As far as like weekly trades, we got ISM PMI is important. So we use this gap. I was marking this today. This Tuesday high, Tuesday low. We broke that. This high still here. Look like we came back to Tuesday's low. No reaction there. We don't need this to be an arrow no more. Short week. What's this? Weekly opens way up here. Where's that candle? A weekly candle. Okay, it's right here. Opened and went straight down. My period dividers are serious, ain't they? But it's good. I can see the days. Monday, Tuesday, Thursday. Let me take this off. I'm going to look at this candle. So, current interval only. Okay, mouse just went crazy for a second. What is my mouse doing? Okay. All right, no. We haven't reached EQ. Of the H4 10 o'clock candle yet. I would want to see a break in the close above that level to be confident in buys. Let's go to H1. Let me see what this looks like right here. It doesn't look too bad. What does it look like right here? You can't even see it right there now. Okay. See the whole week. It's the start of the week here. Still got this way up here too. Tuesday's high, Tuesday's low. Tuesday's high still on the menu. This failed to get there. It's super close. But I think the deciding factor is going to be this equilibrium line. Let me see if I can. That's that range. If this is a true order block, this should stay. This gap has been engulfed, but we're still kind of playing in there. Nothing's telling me we're finna just run through this. If anything, I want to see this new day opening gap touched and maybe buy side delivery, not new day, but new year opening gap. See this gap touched. Maybe put a whole candle through it and we'll see how we play around with this gap. This is the opening price of the year here. This might line up with OTE. Let me see. It's actually right above OTE. We can push up and miss it. Either way, that's still a pretty good sell if we do. So that kind of has my attention. $21, $273, $25. $273.25 opening price for the year. Here's my target. Let's see where TGIF is at. I think I got it here. From here to here. No, I had it. Was it the GAN box I was using? It could have been a fib. Yeah, here it is. TGIF is basically where it's at now. 25% or 30%. It's 50% of the week right there. Okay. Super sold. This being the low of the week. PMI tomorrow. Be on the lookout. I think the big swings are saving coming in next week. Friday about lunch. I'm thinking the algo is going to be done. Okay. All right. That's that on that. Y'all have a good day. Peace.